Wow. Wow, did not see that coming. Okay. And we're going to go live on Facebook. And we're going to go live on Facebook right now. All right, we good? We live? We got something good for you guys today. Good? Is Facebook good? 3, 2, 1 me. Going live on Facebook. We're good? All right. Good. Good. We're good. Ladies and gentlemen, why high hit rate is the key for just 99% of traders. I'm going to show you how abusing the S.E.E short rule is done by traders, how to take advantage of it yourself, how we call the dead bottom in the market yet again. We're not only going to show you that, we're going to also, as promised, show you how our new C strategy worked today. We're going to go through so much of that and more. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. I'm going to show you how to call the dead bottom of the market, how the success rate of our newest strategy, which we shared with you, actually worked today, and how traders are abusing the S.E.E Rule 201 and getting away with it. Not only getting away with it, dragging you along for the ride. We're going to go through so much of that and more. But first, I would like to say, by watching this video, you agree to hold me and T3 harmless and with no responsibility for anything that might be shown on this video. If you disagree to that, you must exit this video right now and immediately. Well, since you agreed, thank you so much. So first, I want to show you how our strategy worked today, how we were focusing on BPTH and SEAL today, the biggest movers in the market, and how traders are abusing the S.E.E Rule 201. So I've been getting, again, several emails. This one will come, let's see, right out of my T3 email box, and I'll just read it to you from a gentleman in the room. Hey, Mark, thanks for posting the Twitter updates on the potential known your limit strategy. It helped me make some of my money back. A trader who came in who was down a lot of money from another room. Will it be possible to continue doing that since I can focus and watch one stock? Because of the type of work that I do full time, I don't have the proper tools to monitor many stocks at once. I appreciate all you do. Sincerely, the gentleman. And I responded, sure, no problem. I'll do my best. So just a very simple email. Yeah, I guess there it is. Just, whoops. I think I accidentally showed his name. Sorry if I showed it. I do apologize. But I wanted to bring up something else, and it's how traders, certain traders, are abusing S.E.E Rule 201 and why you are losing money following these traders. And the truth is, many of these traders can do it right in front of your face, and you wouldn't even know what's happening. You'd be delusional to what's happening based on the fill. So I wanted to share this email. It's from a gentleman who is in one of the rooms. Again, I'm not here to um, I know some people asked me to reveal the room that this gentleman was in. I'm not revealing the gentleman's name or room. And it was from the other day, and he just said that he enjoys listening to my running commentaries in the evening. He experimented with trading, and he names the room. And I would confirm of what you said about trading crap stocks and scalping them for pennies. But I'm going to show you how to abuse the S.E.E rule here. And I got more emails about it today, so I just wanted to clear the record for once and for all. And they say the win rate is probably no better than 2 out of 10. Um, Since nearly all entries short slip low and you start in due to the uptick rule at an immediate loss, which if one is trying to trade 2,000 shares is very psychologically stressful. He said the head moderator of the room is a nice fella, but he has no idea how he gets such great entries and exits in this stuff, especially since, he could only short on the uptick rule. And he wants to say, appreciate my commentary on psychological toxicity. There is just no relief from it in a room like that, referring to the gentleman's room. And regardless of the leader's P&L and how studious and thorough he is, his scans and his abilities to read the level two, and to be clear, he's a nice fellow, and I think he is well intentioned. Hope this finds you well. So, I'm going to show you something right now that's going to actually maybe encourage you to be a prop trader. And I know T3 has a very, I know T3 offers prop trading. I would definitely give them a shot, but I'm here to talk today how these traders are actually abusing one of the SEC rules. So I'm taking you right to sec.gov. Again, there's a if you want a link to this page, it's in the description. I'm just going to move my mug over here for a second. And there's something on in 2010. This is not a new article. The Securities and Exchange Commission adopted a new rule to place certain restrictions on short selling when a stock is experiencing significant downward pressure. It's Rule 201. It's called the alternative uptick rule. Approved today imposes restrictions on short selling only when a stock has triggered a circuit breaker by experiencing a price decline of 10% or more in a day. And then I have some other trader messaging me today that they saw again a trader short BKS on earnings, and he had no idea because he said, as he said, that his order was stuck. And I'm just going to take you, just show you BKS on the daily here. It reported earnings, it gapped down. And what the gentleman was trying to do was he was trying to short BKS throughout the day. And he saw one of his gurus short it and make money, and he didn't understand how it happened. Said the guru also traded a number of names. Kroger was one of them, and Residue Technologies, which was honestly on our list today for a trade as well. Yet I did not trade it. But you saw the guru was able to short these names, and he was unable to. And he was actually just trying to figure out why. He was trying to figure out why he was unable to short it. So, again, back to the SEC rule. It's a very simple thing. So what happens is the SEC doesn't want you. There's some verbiage in there that you have to look at that will actually help you take advantage of it. And again, if you want a link to this SEC article, it's within the description. But here's the thing. Here is the key thing. It's designed to restrict short selling a stock that's down 10% one day. So what these gurus do, and I know groups of them from several firms, and what they do is they actually trade prop accounts because even if you borrow shares to short, they're not going to let you short it. But the way proprietary structures work is when you borrow shares from a proprietary structure, generally, and a lot of them are, maybe some of them are not. You know what? I know people who do this for a living. What they do is they'll take, for example, a BKS, and there's always going to be some schmuck in the firm. I'm not making fun of anyone who's long Barnes and Nobles, but there's some schmuck in the firm, and I'm saying it endearingly, schmuck. There's some schmuck in the firm who's long BKS. Like, let's say somebody's long, you know, a total of this person's long 1,000 shares, that person 5,000 shares, and you have thousands and thousands and thousands of traders under this brokerage, that at any given moment, there is a trader who's in, let's say, 30, 40,000 shares of BKS. Now, what these traders do is, and this is especially true of sub accounts and certain prop structures and sub accounts, if you've ever heard of those, what they do is they actually consider the entire firm long. They actually consider the entire firm long. So even if somebody has 20,000 shares, the trader who locks in those shares early and shorts those shares, they'll actually allow them to short on a downtick. Now, I know some traders get away with that. So what's happening is most likely, and again, I've never been in the gentleman's room that you're referring to, so I'm not sitting there looking at the gentleman's records. But what the gentleman is doing is he's legally, with an L, not an I, he's legally bypassing the uptick rule because the firm is not he's not considered short selling, even though he's shorting the stock. Because, for example, if the gentleman, which you said is probably well intentioned, which I completely agree with you, would short like 10,000 shares of Barnes and Nobles or 20,000 shares of Barnes and Noble, and the firm has 50,000 shares, unless you are actually part of that sub account or proprietary firm, you're going to be unable to do that, most likely. Now, yeah, there are rare situations where some of you guys are actually prop traders, but the truth is 99.9% of you are not prop traders, and that will always be a fact. The vast, vast, vast majority of you are not passing your series exams and are not trading firm capital. That is the vast majority of traders. Now, based on this, somebody could do this right in front of you. Could be sitting right next to the person watching them do it, and you would think it's just a normal trade. You would see them just shorting the stock as you would normally short a stock, and the stock would go down and they'd be up money, and you would think it's the most miraculous thing. So this gentleman says that he actually had the ability to, watch the gentleman trade at one given point, came home, this was months ago, came home, tried to replicate what this person was doing and couldn't do it because every time the person would try to short, the person's like, I even threw in a market order short. It'll sit there and it'll hold your order until it upticks. So what happens is, let's say, like, and again, the example of Barnes and Nobles, which the person asked me about today, in an example like Barnes and Nobles, if you were, for example, trying to short here at whatever 510, let's say, and it's on a downtick, just what I'm making the number up, right? I don't know where the person you were following was shorting or whatever. What would happen is the stock would drop to like 510 to 503. The guru would short 20,000 shares. Tim, that's a quick $1,400. Has the best commission structure. Walks away maybe even with more than $1,400, considering the firm was nice enough to give that gentleman a $0 to 50-cent ticket rate, which is what they generally do for favored clients and members. I know I'm a favorite client and member with Schwab. I'll get a good rate anywhere I go. So look, it's not whatever. It is what it is, right? Some people who trade a lot of money do get these favored rates, and the people who trade a lot of the money in the room know exactly what I'm talking about. So what happens is that person will try to short at 510, and the stock, for example, drops to like 490 and then goes to 491, or drops to 495 and then goes to 496. And when that person tries to short at 510, they're filled at 496 with their market order, and they're instantly down money when the guru is already out of the trade and made his thousands and thousands of dollars. Now, again, this is a way to bypass with an legally Rule 201, or SEC Rule 201. Again, there's a link in the description, because what happens is underneath that structure, the trader is not shorting overall. Even though there's one trader short, they take the collective of the entire account. This is especially true for sub accounts, by the way. Like, I know this is true for sub accounts. And what they do is they look at the entire structure of the firm and say the firm is net long. So even if you have 100 people that totally own, like, 50,000 shares of Barnes and Noble, for example, which is 500 shares each. It's very common for traders to own these names on Gap Down. You always have someone who will buy 1,000 shares. What that guru will do is they'll take advantage of that and short it to their advantage with a really, great concept behind it, and actually take advantage of that. That is why 99.9% of you will not make money shorting these names. As I told you before, these are sub $20 stocks that are down 10% or more. Do you think there's a reason why I say 10% or more? That number wasn't a randomly drawn number. It's the actual SEC Rule 201, which actually prevents the average trader. I can't do it. I can't even do it. Schwab will not let me do it. But if you're within that, especially that sub account structure, depending on wherever your guru is trading, of course, they'll be able to short on that downtick. They'll be able to call out their entry on it, and you would most likely, in the majority of times, not be able to get that entry. Okay, now we're going to go ahead and we're going to apply um, what happened today with the Melnick Know Your Limit strategy. There was one earnings name that actually ended up working. We made money in another one, but it was actually a mistake, and I don't even want to go over it, but there was another trade we called out well. I just want to stick with the methodology. Very, very simple. You get two 5-minute red bars in a row. This was the only one that set up properly based on the Know Your Limit strategy. If you haven't seen it, there are prior videos which I discuss it all. It's all based on this slide. It's 100% based on this slide. You just follow this methodology, and it worked one for one, which is, I guess, 100%. But no, it's not 100% strategy, of course. No strategy is, but the one time it's set up today, it also coincidentally works. So every time this strategy has been setting up, it's been working, especially on the exponential 8 early on. That's been really the easy money. So you could just see right here, Stratasys breaks through the 8, gets as high as 24.50, and then plummets upon itself throughout the entire day and never looks back. So again, really nice setup here, really nice methodology, really great way um, to capitalize on the market. Now, again, I wanted the title of this video is why hit rate is key for 99% of traders. Now, the reason why hit rate is really key for you as a trader and why you need a high hit rate is very simply, not to go back to the gentleman's email, but he says it best, is that when you're losing trades, whoops, that was another email. When you're losing trades, when you're losing on trades, right here, um, you're suffering psychological stress or psychological toxicity, as the gentleman pointed out here, as the gentleman pointed out there. And what that does is it tends to grind on you. So what happens is most of the traders you will see that are not hitting a higher hit rate will burn out. Not only that, there are traders that can survive a lot of psychological toxicity. You know, ask the kid whose parents have 50 million, dollars in net assets from Florida or California. Ask that kid how stressful a psychological toxicity is when he knows that there's going to be, a large pillow underneath to catch him. Those traders actually suffer psychological toxicity less. Ask the trader who has 3 kids, a wife out of work, has to support his family, and has a $25,000 account. That person is going to suffer heavy psychological toxicity. That person doesn't have a beautiful oceanfront view with palm trees and happiness all around them and phenomenal wealth comparatively to the average person. So it's very important that certain strategies cater to the trader with the I don't not lowest common denominator, but lowest account value. You have to be able to appeal to those traders, because if traders, when I'm getting these emails from traders like the gentleman who just emailed me before earlier, who's chilling with a $10,000 account, or traders with $3,000 accounts and $4,000 accounts and $25,000 accounts, you need to be able to show these traders how to make money. Now, I got a ton of emails again today thanking me. I just showed you one of them from our S.E.E strategy because it's right. Now, a lot of people, out there might not even think it's even remotely possible to have such a phenomenal hit rate. So when I actually posted my P&L from T3, it was actually a very poor marketing ploy because most people were too shocked to see a confirmed P&L over $1 million that had such a high win rate of over 93%. They just couldn't believe it. And people think like, when you have this hit rate, the goal in trading is to be right. Unless you're some person from a phenomenally advantageous or privileged position, the majority of traders need to be right more often than they're wrong. Here's the bottom line. Think of it like this if you don't understand. If somebody put, not me, someone else, they put $100 million in your bank account, how many of you guys would stress over blowing a $50,000 account or $10,000 account or $5,000 account or $100,000 account? How many of you guys would stress over that if you had 100 million in your bank account, or if you are going to, if you are set to inherit that sort of money? Now, that's not to downplay psychological toxicity from anybody. It's just stating a clear fact that every individual is in a unique position. So you need to be able to give trades that win more often than they lose. Otherwise, you're going to have psychological toxicity. You're going to be thinking about retiring all the time because you're just going to be unable to put up with the daily stresses of trading. The truth is, I've been trading this market on my 20th year, and I feel great, and I'm going to go another 20 years, and I won't even blink. And the reason is because of a phenomenally high hit rate. It does exist. It exists in the Newsbeat live room. So just be careful out there for traders who are going to give you these 50% win rates. These, traders who say they could do 60% generally are doing 45. And traders who are showing you the good times probably never showed you the bad times. I mean, how many traders that you've seen out there who are showing these great, numbers that are appealing to you perhaps? How many times have you saw that trader have a down day? All of a sudden there's like there's a month calm or a 2 week calm or a 3 week calm where all of a sudden there's nothing. So just keep in mind there's a way to boast, and a lot of those traders who boast are doing things that, as explained earlier in the video, you wouldn't be able to do in your wildest dreams, no matter what methodology you use, no matter what methodology was taught to you, no matter how big your account size is. It's just simply impossible because somebody is abusing and circumventing in a positive way. Look, God bless people who do that. They're circumventing the actual SEC Rule 201. So, unless that person, so if you are in a prop account, I highly suggest you do it. If you're like 99% of us, you're walking into a brick wall trying to break through with your teeth. Try to chew through it and let me know how far you get. So, again, strategy worked really well. Um, Broke through right here, shorted. Again, we actually showed you the strategy yesterday in which we would apply today. If you applied that today, if you were one of us in the room who applied it today, you would have been in the situation shorting Stratasys probably in the 24.20 to 24.40 range right over here before watching it drop to $22.70 and change. And again, I'm not even insinuating that you caught $1.70 in the name or $1.50. I'm saying even if you catch 30 cents, 20 cents, 40 cents, 50 cents, 60 cents, 70 cents on a Stratasys, you are my hero. That's how I see it. As long as you're able to catch something like that, you are my hero, and you did really well. And the truth is, some traders did a lot better than others. But what was the consistent theme is traders who applied the methodology in which we taught did come out making money. Now, we did something else that was also pretty cool today. Calling the bottom of the market. So what we did here today is we called out the bottom of the spider. So here are yesterday's algo levels. Whoa, that didn't work. Let's try it like this. All right, so here are well, let me move my face. Sorry. All right, so here was yesterday's algos level. Don't copy these. I'm going to show you today's algo levels shortly. But here were yesterday's algos levels, and we called the bottom of the Qs at 274.40. Now you might be sitting there thinking, well, Mark, on the spiders, the bottom was 274.07, so it broke your level by 33 cents. It was very accurate, not that accurate, right? I have to show you something. We actually nailed it in real time. So here's the 5 minute of the spiders today. Something that's hard to pump and dump, for example, something that's hard to abuse, something that you actually have to understand real trading in order to make money on, like a little name like the spiders, you know, like not a pump and dump, You know what I'm saying? So what happens here on the spiders, check this out, goes down to 274.36. Again, cannot make this up. Cannot make this up. We literally called 274.40. So when we share with you these algo levels, please understand how many people are making money off it. And it's not only that. Let's say you're at work and you're not following the algo levels exactly. And even though we called it yesterday, we called it today again. Look what happens. I kid you not. This is the value you get in our room. 10:20 a.m. on Twitter. Price alert. Spider support 274.40. So let's look at a 1 minute of the spiders just to show you the true value. This is like trading the S&P futures. This is the spiders, one of the largest instruments in existence. You got it at 10:20 a.m. So right over here, imagine you received a tweet saying that the spider's bottom on this candle, that the spider's bottom was coming. This is a 1 minute chart of the spiders at 10:20 a.m. You can see the timestamp in the top left. Boom, hits 274.36, breaks our level by 4 pennies, and explodes all the way up to 275.30, digests a little, and even heads higher to 275.48. That, ladies and gentlemen, that is something special. That is something scalable. That is something that the gentleman who wrote me, you do not need to abuse SEC Rule 201 in order to make money and pretend that you're a good trader. That is not what you have to do. The other level, of course, um, that we gave you today was indeed in the triple Qs. And of course, we got a little heart on it there. I'll give you another heart there. See, I added a heart. 2:39 p.m. You got an alert for the triple Qs. It actually just missed over there early on in the day. Okay, up on the 5 minute. Okay, so right over here, Qs flush down, break a little, rally right back into the close. People made money on that. But what happens was we also translated this trend line here on a 5 minute. Traders were actually calling the bottom here. This is actually where we called the bottom of the Qs and actually caught Facebook long. We actually bought Facebook long right here off of this bounce and caught that bottom as well. It wasn't as precise as the tweet one, but it was more precise than the tweet one. The tweet one happened a little later, but I just wanted to show you an example of how that would work. So between nailing the bottom of the spiders before it explodes, besides showing you a strategy that we're going to apply tomorrow, we're going to apply this tomorrow. And guess what? It's been working every single time this week. Every single time. Just stick with the 8. Stick with the first one. Just try to do the first half of it. The strategy works. It makes money. It's highly consistent. You don't have to be a pump and dumper. You don't have to subject yourself to things that most traders can't subject themselves to if they wanted to. You could make money. You could be successful in this market. Right over here, you want tomorrow's algo levels? You want to know where the market could potentially bottom tomorrow? These are our algo levels for tomorrow. They don't always hit, but when they do, they tend to give you a really nice bounce or drop considering if they hit support or resistance. They don't always hit, but when they do, they're very, very effective. Just like us calling the dead bottom of the spiders 2 days in a row. So with that, ladies and gentlemen, I hope I gave you, at least some form of enlightenment. I already explained to you the strategies I'm going to be applying tomorrow. I just wanted to quickly show you that on our radar today was actually in the pre-market was BPTH, and some of you guys might have missed it today. Some of you guys might have saw it. We actually called a long in BPTH right over here when you came down and hit the exponential 8. It's a very wild name. I prefer my room not to trade these names because they could be deadly. The stock went from $22 to $73.50 in a matter of an hour. And this was our long based off recent methodology we've been using right over here. We were calling this long right over here at the bottom of this candle. Isn't that incredible? Isn't that incredible? Not only that, this is another one we were trading, and I want to show you guys something special here. This is one that we were trading today that we made decent on. I caught two really nice scalps. Again, just using our methodology, worked 2 times for me. This stock right now is up $2.61 after hours. As a result, this is a stock that I'm watching for tomorrow. I am making it my bullish setup of the day. S.E.E bullish trigger, $7.20. There's a nice little trigger there that brings you over $8, and it is my focus name of the day here. Why this is really interesting for me and why, and I haven't been giving you guys a lot of game plan names recently. I get that. But why this one is particularly interesting to me, besides that we traded it and it worked, is I want you to see this BPTH yesterday, where it went from about 7 to 14.5 bucks approximately. Then it gapped up again and shot up even super hard. Doesn't this look similar on BPTH to S.E.E? Doesn't this day in S.E.E look similar to BPTH yesterday? What I'm saying is, I know it sounds nuts, but this seal can explode over 10 bucks. Yes, I'm talking about this name that closed at $3.04. That's trading $5.65 after hours as I speak right now. This stock could blast over $10 potentially. If you want to watch us trade it, call bottoms just like we did in SEAL today and BPTH today and the spiders today. If you want to see somebody actually make money without exploiting any pump and dump strategies or exploiting an SEC 201 rule, if you want to see a trader who actually cares about making you money as opposed to pump and dumping potentially right in front of your face or exploiting certain SEC rules for their legal benefit. There's a reason, ladies and gentlemen, why garbage traders who exploit rules swear that the Newsbeat live room is the largest, fastest growing trading room in the nation. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.